Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe to this channel, and love you all of my subscribers for your support. And please, watch this video till the very end because YouTube will not push my videos to more people. The algorithms actively suppress this kind of financial truth, so your watch time and your unwavering attention are the absolute only things keeping this vital message alive. Let us have a deeply human, brutally honest conversation for a moment. If you are watching this, you are not a casual tourist in the financial markets. You are a silver stacker. You are a contrarian. You are someone who understands the fundamental, undeniable difference between a price tag and actual intrinsic value. For years, you have watched the purchasing power of your local currency evaporate like water on hot asphalt. You have watched the cost of housing, groceries, and basic energy skyrocket, all while the central banks printed trillions of unbacked fiat currency out of thin air, attempting to paper over a structurally bankrupt system. You bought silver not just as a speculative investment, but as a rigid insurance policy for your family's future. You held it in your hands, the cold, dense, undeniable reality of physical wealth, and you waited. You endured the relentless mockery of mainstream analysts who called you archaic, who said precious metals were useless pet rocks in the magnificent age of digital illusion and cryptocurrency. You held your nerve through the brutal, systematic manipulation of the COMEX futures market. And when January 2026 hit and silver violently breached $100, $110, and peaked at $121, you felt that long-awaited righteous vindication. But the crash that immediately followed, the artificial, margin call-induced slaughter, was designed to do one specific thing: break your spirit. It was meticulously designed to shake the weak hands out of the market. Wall Street understands human psychology perfectly. They weaponize it. They know that if they can generate enough extreme, stomach-churning volatility, the average retail investor will eventually capitulate. They will sell their physical, finite asset for depreciating infinite fiat currency just to stop the emotional pain of watching their portfolio bleed. Do not let them take your wealth. Because what they are doing right now, while retail investors lick their wounds and question their convictions, is hoarding the physical supply at a massive discount. Listen to me very carefully right now. Let us strip away the emotion, the fear, and the market noise, and look at the cold, hard, inescapable mathematics of 2026. We are currently in the sixth consecutive year of a global physical silver supply deficit. Let the gravity of that statement sink in. Since the beginning of this decade, the industrialized world has consumed vastly more silver than it has managed to pull out of the Earth's crust. In the past, these annual gaping deficits were conveniently covered by dipping into massive above-ground stockpiles, hoards held by the London Bullion Market Association and the COMEX. But those historical stockpiles have been systematically drained, leased out, and rehypothecated to the point of absolute fragility. We are now scraping the bottom of the barrel. You might be asking yourself why the mining companies do not simply dig more silver out of the ground to meet this exploding demand. Here is the terrifying part they will not tell you on mainstream financial television. Mining supply is highly inelastic. Nearly 70% of all silver produced globally is mined merely as a byproduct of extracting other base metals like copper, lead, and zinc. You cannot simply flip a switch and open a dedicated silver mine just because the spot price of silver jumps $20. It takes a minimum of 10 to 15 years to discover a deposit, acquire the permits, secure the billions in funding, and operationalize a new mining project. Furthermore, as the global economy has dramatically slowed under the crushing weight of high interest rates and massive sovereign debt, the demand for base metals like zinc and copper has softened in the construction sectors. When copper and zinc mines scale back production or shut down entirely due to unprofitability, the byproduct silver simply vanishes from the global supply chain. It is a vicious, self-fulfilling cycle of depletion. The physical reality is that we are exhausting our readily available reserves, and ore grades globally are deteriorating at an alarming rate. We are moving more dirt to get less metal. When a well is running dry, it fundamentally does not matter if you pump out the last few remaining gallons a little bit slower. The well is still empty, and the thirst of the market is only growing. You think silver is just a historical hedge against inflation? You are missing the biggest industrial paradigm shift of the 21st century. To truly understand the supply shock that is currently loading into the system, you must understand the absolute transformation of silver's identity in 2026. Silver is no longer just the poor man's gold. It has evolved into the most critical, highly sought-after technological metal on the periodic table. We are standing directly at the convergence of three massive, unstoppable industrial supercycles, and physical silver is the irreplaceable, non-negotiable linchpin for every single one of them. First, consider the generative artificial intelligence infrastructure boom. Over the last 2 years, AI has transitioned from a software novelty to a massive, energy-intensive physical infrastructure reality. Gigantic data centers are being constructed globally at a breakneck pace to house the next-generation processors required to run these sprawling neural networks. These centers require unimaginable amounts of electrical conductivity to function without physically melting down. Silver is, by the laws of physics, the most electrically and thermally conductive element on Earth. The high-efficiency semiconductors, the advanced server racks, the intricate liquid cooling architectures, and the massive electrical conduits connecting them to the grid, they all demand high-grade silver. NVIDIA, AMD, and the major tech conglomerates are quietly securing supply chains because without silver, the AI revolution physically grinds to a halt. Second, we are witnessing a rapid, desperate nuclear renaissance. Governments worldwide have finally woken up to the mathematical reality that intermittent wind and solar energy simply cannot power the immense 24/7 baseline electrical load required by the new AI data centers and the electric vehicle mandates. The global pivot to small modular nuclear reactors is happening right now in 2026, with massive government subsidies driving deployment. Do you know what is absolutely required to control the volatile fission reaction in these modern nuclear reactors? Precision control rods. And what is a primary material used in the manufacturing of these nuclear control rods due to its exceptional ability to absorb loose neutrons? Silver. Specifically, silver-indium-cadmium alloys. Every single new nuclear reactor commissioned requires tens of thousands of ounces of physical silver. This is a massive, compounding, price-inelastic demand driver that the derivatives market has completely failed to price in. Third, despite a slowing macroeconomic environment, the forced transition to solar photovoltaics continues relentlessly. The newer generations of solar cells, specifically TOPCon and heterojunction technology, are rapidly replacing the older technologies because they are vastly more efficient at converting sunlight into electricity. However, this efficiency comes at a heavy material cost. These new cells require significantly more silver paste per watt than the older models. In some cases, heterojunction cells use nearly double the amount of silver. Here is the undeniable truth about these three industries. They do not care about the Federal Reserve's interest rate decisions. They do not care about the consumer price index or retail sentiment. They must buy physical silver at the spot market price, whether it is sitting at $30, $80, or $150 per ounce, because their multi-billion-dollar technologies physically cannot function without it. Demand destruction in these sectors via high silver prices is a myth. The cost of the silver is a fraction of the total product cost, but its presence is absolutely mandatory. If you tune out now, you will miss the exact mechanism that could separate you from your wealth over the next 18 months. We must address the primary narrative being used to suppress the price right now. Recently, major institutional powerhouses like the Bank of America and UBS issued a chilling, widely publicized warning to their elite clients. They forecasted that while silver might experience speculative rallies, it is ultimately destined to structurally collapse back to $75 or lower by 2027. Their reasoning relies on a theoretical phenomenon they are calling de-silverization. When silver briefly spiked to $121 in January, it allegedly triggered absolute panic in corporate boardrooms worldwide. Solar panel manufacturers in China and the West looked at their balance sheets and realized that if silver stayed in the triple digits permanently, their profit margins would be severely compressed. As a result, the banks claim, a massive, desperate rush is underway in the industrial sector to thrift or actively substitute silver. They propose that industries are rapidly engineering new alloys that use a fraction of the precious metal, or attempting to replace silver entirely with cheaper copper in solar cells. The Bank of America thesis dictates that industrial demand has peaked, that high prices are effectively curing high prices, and that by 2027, the technology to bypass silver will have caught up, leaving millions of ounces of surplus supply floating in the market and crashing the price forever. This is the exact, perfectly manicured narrative Wall Street desperately wants you to swallow. They want you to believe that silver's grand industrial run is permanently over, so that you sell your physical holdings into their open arms. But I am telling you, as someone who obsessively tracks the physical supply chains and the engineering realities daily, this is a dangerous, mathematically flawed half-truth. Copper oxidizes rapidly. Copper degrades under thermal stress. You simply cannot build a 25-year solar array for a major utility grid using inferior conductive materials and expect it to survive the brutal elements of nature without massive failure rates. The substitution effect is real in theory, yes, but its practical application is vastly overstated, incredibly expensive to retool factories for, and it takes years of rigorous safety testing to implement into global energy grids. More importantly, Wall Street is entirely missing the true world-altering countershock. Even if industrial demand were to magically cool by 10% due to futuristic thrifting, a completely different beast has awakened in 2026. A beast that is infinitely more powerful and ravenous than the solar panel industry. The world order has fundamentally fractured. We are living through the agonizing death throes of the unipolar global financial system. Look at what is happening geopolitically. We have seen renewed, aggressive tariff wars fragmenting global trade, creating chaotic supply chain bottlenecks, and driving up the cost of everyday goods. The Middle East remains a terrifying geopolitical powder keg, keeping energy prices violently unstable and threatening the global shipping lanes. Meanwhile, the BRICS nations, Brazil, Russia, India, China, South Africa, and their rapidly expanding network of allied countries, have accelerated their de-dollarization efforts to a breakneck pace. They are no longer just talking about it, they are actively and aggressively divorcing their massive economies from the US dollar payment systems, settling bilateral trade in local currencies and physical gold. For the last 50 years, the United States dollar was the undisputed, unquestioned safe haven of the world. In 2026, that historical trust is rapidly, visibly evaporating on the world stage. Central banks across the Eastern Hemisphere are hoarding physical gold like never before in recorded history. Gold decisively broke the staggering $5,000 psychological barrier earlier this year and is currently consolidating massively near $4,850. We are witnessing the transition of silver from a pure industrial commodity back into a sovereign geopolitical weapon. This is the precise shock that the elite de-silverization models completely fail to account for in their spreadsheets. Silver is forcefully reclaiming its historical, deeply ingrained role as a primary monetary metal. If industrial demand shrinks slightly, but global safe haven investment demand increases by 50 or 100% as populations desperately flee failing fiat currencies, the price of silver will not collapse. It will become an absolute supernova. The physical hoarding by high net worth individuals, family offices, and sovereign entities is quietly and methodically replacing the industrial consumption. The fundamental rules of the game have changed, and those who only look at industrial supply and demand charts are driving at 100 miles an hour while staring intently into the rearview mirror. Let us anchor this entire thesis in the ultimate historical truth teller of the precious metals market, the gold to silver ratio. The GSR simply and elegantly measures exactly how many ounces of silver it takes to buy one single ounce of gold. Historically, as it comes out of the ground in the Earth's crust, the ratio is about 8 to 1. During the height of the Roman Empire, it was legally fixed at 12 to 1. In modern historical averages, it generally hovers between 40 to 1 and 60 to 1. Let us run the undisputed math today, in late May 2026. The gold price sits at roughly $4,850 per ounce. The artificially suppressed silver price sits at roughly $80 per ounce. This puts the current gold to silver ratio somewhere near a staggering 60 to 1. When gold violently spiked earlier this year, silver followed, but it is still lagging massively behind its historical average relative to its monetary big brother. Even at $80 an ounce, silver is incredibly, mathematically, and historically cheap. If the gold to silver ratio simply reverts to its historical modern average of 50 to 1, which it has repeatedly done during every major precious metal bull market in history, and gold merely stays completely flat at $4,850, silver would have to mathematically reprice immediately to $97 per ounce just to catch up. If the ratio compresses further to 40 to 1, as it famously did in 2011, silver reaches $121 per ounce, instantly retesting its January all-time highs. And if the global fiat system truly fractures, and gold marches to $6,000 as many conservative analysts now predict, a 40 to 1 ratio puts silver at a staggering $150 per ounce. This is not wild speculation. This is not internet hopium. This is ruthless, mean reversion mathematics. Silver is a violently coiled spring, and the immense crushing pressure of global sovereign debt, sticky inflation, and currency debasement is pushing down on it harder every single day. Why am I telling you all of this with such intense urgency? Because the institutions are actively trying to trap you in a burning building. The extreme volatility we saw in early 2026, The 5% daily swings, the massive flash crashes at 3 a.m. when the physical markets are closed, these are deliberate features of the new market, not accidental bugs. The commodities exchanges have repeatedly raised margin requirements on silver futures. They do this intentionally and maliciously. By making it vastly more expensive to hold leveraged paper contracts, they force retail speculators to liquidate their positions in a panic, which drives the paper price of silver down into the mud. When the paper price crashes, what do you think the major institutions do? They use that artificially low paper price to quietly, aggressively scoop up the physical silver from the refiners and miners around the world. They shake you violently out of the tree, and they catch the golden fruit at the bottom. Do not play their rigged paper games. If you are trading leveraged silver exchange-traded funds or messing with COMEX futures contracts, you are willingly walking into a rigged casino where the house can literally change the rules of the game while the roulette wheel is already spinning. The absolute only way to step outside of this deeply manipulated system is to hold the physical metal yourself. Silver bar from his desk, holding it up. The harsh studio lights catch the brilliant, unmistakable gleam of the precious metal. Look at this. Really look at it. This object cannot be printed by a desperate central banker. It cannot be hacked by a malicious state actor. It cannot be downgraded by a corrupt credit rating agency. And it cannot be frozen or confiscated with the push of a button by a government overreaching its authority. It holds absolutely zero counterparty risk. When you hold physical silver in your hands, you literally become your own central bank. We are entering a phase of extreme generational consequence. The financial decisions you make in the next 3 to 6 months will absolutely dictate and define your family's financial standing and freedom for the next decade. The real shock is not that silver might experience engineered dips and pullbacks. The true shock is that the window to acquire physical silver at these heavily manipulated levels is closing permanently. As the undeniable industrial supply deficit grinds relentlessly on, and as the harsh geopolitical reality forces nations to stockpile tangible physical assets, we will inevitably reach an absolute breaking point in the market architecture. There will come a day, and I promise you it is approaching faster than anyone in the mainstream media realizes, where the paper price of silver will completely and violently detach from the physical price. You will see a spot price of $85 flashing on your trading screen, but when you go to your local coin dealer or log on to your online bullion distributor, the physical premium will be 50%, 80%, or well over 100%. Or vastly more likely, there will simply be a stark white sign on the front door that says, "Sold out, no inventory at any price." We saw fleeting glimpses of this physical shortage in 2020. We saw a massive, terrifying preview of this exact scenario during the squeeze in January 2026. The next time it happens, the detachment will be permanent, and the physical metal will be utterly unobtainable for the average citizen. Here is what you must do right now to protect yourself and your family. Assess your overall financial position immediately. Look deeply at your retirement portfolio. Are you massively overexposed to failing fiat currencies, incredibly fragile banking stocks, and hyperinflated tech equities that rely on cheap debt? It is time to seriously, aggressively consider reallocating a meaningful portion of your wealth into tangible, hard assets that cannot default. Avoid the leverage trap at all costs. Do not try to get rich quick by trading silver futures or highly speculative options. The engineered volatility will liquidate you and leave you with nothing. Remember, silver is ultimate wealth preservation. It is not a lottery ticket. Buy physical metal and take immediate delivery. Whether it is sovereign coins, rounds, or heavy poured bars, buy what you can reasonably afford. Take physical possession immediately and store it securely outside of the banking system. Prepare yourself mentally for the psychological warfare ahead. Expect wild, nonsensical price swings. If the bullion banks smash the paper price down to $65 tomorrow morning, you do not panic. You do not despair. You understand fundamentally that they are just putting real, generational wealth on a temporary fire sale. You smile, you thank them for their manipulation, and you aggressively accumulate more physical ounces. History does not always repeat itself exactly, but it rhymes with a terrifying precision. Every single major fiat currency experiment in human history, from the Roman denarius to the Weimar papier mark to the modern global reserve system, has ended with a chaotic, inevitable return to the intrinsic, undeniable value of gold and silver. We are the specific generation that has been chosen by history to live through the explosive finale of the greatest, most reckless debt supercycle the world has ever seen. You have a profound choice right now. You can blindly listen to the mainstream media, blindly trust the central banks who caused this crisis, and allow creeping inflation to quietly bleed your life's work completely dry. Or you can look logically at the data. You can look at the glaring supply deficits. You can look at the shifting reality of the global geopolitical landscape, step confidently outside the matrix of financial illusion, and aggressively protect what is yours. The Great Silver Shock is not a theory. It is a mathematical inevitability arriving at our doorstep. You are now fully awake to the reality of the situation. The rest of the story is entirely up to you. The studio lighting dims slightly, leaving him illuminated against the dark background. The Aurex logo begins to slowly fade onto the bottom of the screen, glowing with a sharp, metallic silver sheen. Thank you so much for giving me your most valuable asset, your time, today. I know these macroeconomic topics are heavy, and I know they can be deeply concerning, but facing reality head-on is the absolute only way we survive and thrive in this shifting economy. Remember, I am not a financial advisor, and nothing in this video is financial advice. This is purely financial education, raw data, and historical context. It is entirely up to you to do your own rigorous research, consult with professionals, and make the best, most educated decisions for your family's specific situation. If you found deep value in this video today, please smash the like button right now. It genuinely helps us fight back against the algorithm that tries to hide this data. Share this video immediately with someone you care about who desperately needs to hear this truth before the window closes. And once again, please subscribe to the channel and turn on the notification bell. I love you, all of my subscribers, for your incredible, unwavering support on this journey for financial truth. Stay immensely strong, stay forever vigilant, and whatever you do, keep stacking. This is John AG with Aurex signing off. I will see you in the next one.